Imagine waking up one day to find that your bank, the one you've trusted with your hard-earned money for years, suddenly has tighter restrictions on its lending practices. How would that affect you? How would it affect the economy at large? In the financial world, new capital rules are stirring the pot. The Wall Street elite, the CEOs of major banks, are raising concerns about these rules, arguing they could have a significant negative impact not only on their institutions, but also on everyday Americans. Fundamentally, these rules require banks to hold more capital. This is a safety net, a buffer of sorts to absorb potential losses and prevent a domino effect of financial distress. It's a lesson learned from the 2008 financial crisis, where the thin capital buffers of banks led to a catastrophic global recession. But the CEOs argue that these new rules might go too far. By requiring banks to hold more capital, they claim that it could limit their ability to lend. For everyday Americans, this could mean harder access to mortgages, car loans, and small business loans. For the economy, it could mean slower growth as businesses struggle to find the funding they need to expand and create jobs. Furthermore, the CEOs argue that these new rules could make American banks less competitive globally. If foreign banks aren't subject to the same stringent requirements, they might have a competitive advantage in the global financial market. In a nutshell, the new capital rules are a balancing act. On one hand, they aim to create a more robust and resilient financial system, less prone to devastating crises. On the other hand, they could potentially restrict lending, affecting everyday Americans and slowing economic growth. The debate is ongoing, and the final impact of these rules remains to be seen. But one thing is certain: the financial landscape is changing, and it's a change that could affect us all, from Wall Street CEOs to small-town entrepreneurs. The question now is not if, but how these changes will shape our financial future.